If you're an American or US citizen or someone who just has to pay taxes in the US, then you're going to want to listen to how this all works. So the US tax system is a progressive tax system. So in my other video, I talked about how the US tax system is an incentivized system where it's set up in a way where they try to get you to do things that is most beneficial for the country and what people who created the tax laws had intentions of doing. So in this video, we're going to talk about basically the ins and outs of the numbers and how the tax system works. So the US tax system is a progressive tax system. And we see a lot of clients that don't really understand what that means. They're like, hey, if I make more money, does that put me in a higher tax bracket? I don't want to go into another tax bracket, or I want to stay in this one so that I don't pay as much tax. And those are all great questions and things you should be worried about. But a lot of people just don't understand how the system works. And we even see some clients are scared to even make money because they don't want to go into a tax bracket and don't want to pay the tax. And if that's the mentality, that shouldn't be it. Like, you should make money and you should want to make money, but you shouldn't not want to make money just because you don't want to pay the tax. Now, there are ways that we help our clients and people try to minimize that, and you should be trying to do that, but it shouldn't deter you from making the actual money. So the US tax system is a progressive tax system. What that means is, as you make more money, the percentage amount that you pay on that money increases. So as you can see, here's the 2025 tax table or tax rates for Americans. So you have the different brackets on the left, and then on the right is the different income levels. If you're single, it's less money. If you're married filing jointly, then you get more before you hit to a higher tax bracket. But as you can see, it goes from 10%, 12%, all the way up to the highest tax bracket of 37%. I'm not going to read each number, but as you can see, it's there. I'll put it in the link or where you can find the tax table, but you can just Google IRS tax table. You might be in technically let's say you make over 600 grand or something and you're single, you might be in the highest tax bracket of 37%, but you're not paying 37% on all of that 600 grand. Or let's take another example. For not everyone's going to be 600 grand, but let's say you make 100 grand. Now, you're not going to be taxed at 22% at 100 grand if you're filing single, but you will be taxed all the way up to that amount. So what that means is, on that first $11,000, you're taxed at 10%. From $11,000 roughly to $48,000, you're taxed at the 12%. From that $48,000 all the way up to the $100,000 that you've made, you're taxed at 22%. So how you get it's called effective tax rate, or your actual tax rate, is you would basically times that 100, and let's say your tax preparer, someone says, oh, you made 100 grand, and let's say you owe 15 grand. Well, then you would do, $15,000 divided by $100,000, and that would get you, in this example, 15%, that would get you your effective tax rate. So that's formula how you get your effective tax rate. So that's your real tax rate. You can be like, okay, I'm taxed at 15% rate, 15% times 100 grand is $15,000. So, but as you make more money, you increase your percentage because you're climbing the tax brackets. So from that 48 grand all the way up to $350, if you're filing single, you're only paying 22% on that range of income. So anything above $103,350, you're going to be then paying 24% on that amount. So technically, and let's say in this scenario, you're like, oh, let's say I'm at $110,000. I'm like, oh, I feel like I just went into a higher tax bracket. Is there anything I can do to lower it because I don't want to be at that? You could say, okay, hey, yeah, let's contribute to a 401k or retirement account. And let's say you do, oh, I want $10,000. So you contribute $10,000, but that gives you a deduction on your income. So if you made $110,000, you take $10,000, contribute to your 401k, then now your taxable income is $100,000. So now you just dropped out of the 24% tax bracket, and now you dropped that income back down to 22% tax bracket, so you're only at 100 grand. So in that scenario, by contributing $10,000, you would save around $2,000 to $2,300, give or take on the math, by making that contribution. So as you can see, making the contributions to retirement accounts is just one of many strategies can lower your taxable amount. And we talked about in another video the difference between a deduction and a credit. But the main point of this video is that you understand that it is a progressive rate. So when the clients come to us and they're like, oh, I'm in a high tax bracket, I want to get out of this, which is good and you should, but again, you're already being taxed in all the other brackets, technically all the way up to the bracket you're in. So if someone's like, oh, I'm in a 24% tax bracket, well, how do I get out of this bracket? Well, technically you're already in the 10% bracket, the 12% bracket, 22% bracket. You're already in all the other brackets. You're just also in that. So, and it could be you're barely in that one. It could be you're in it by a lot. So it's kind of misleading on what people say. And then there's a lot of confusion we see. And just some quick numbers here. If you're wondering, oh, am I like everyone else? Is everyone else in the bracket I'm in? 50% of the US population, their AGI, which means adjusted gross income, are below $50,000. So if you make above $50,000, you're in the top 50%. You're in the top 10% of people, this is based on people who file their tax returns. So this is where we're reading the numbers from based on the IRS historical data over all the years, just for inflation. Top 10% make around above $160,000 of AGI. The top 5% is around $250,000 or more. And then the top 1% is that $600,000 amount are in the top 1%. So if you're making, above, and we're talking single filers, so jointly it varies a little different, but if you're making above 150, 160 grand, then you're already in the top 10%, which it depends who you talk to on if that's upper class, lower class, but that would definitely be upper class. So, and depending on the city you're in, you might need to adjust that, because if you're in California, 100 grand doesn't go as far as if you're in Arkansas or the Midwest or something like that. So so it just gives some perspective on, the income ranges and the tax rate. So if you made it this far in the video, I want to say thank you for that. And now hopefully you have a better understanding of how the progressive tax system works and what your different tax rates are and what that actually means. So if someone's like, oh, I'm in the 30% or I'm paying over 30% taxes, whatever, that seems so high. Well, one, you need to ask them if that's their effective tax rate. So have they averaged it out, or they're just talking about, $10,000 of income or $20,000 of income is getting taxed at the high amount. Like, let's see what the actual rate is. The national average is around 23% effective tax rate. So that's something to gauge. Most of you, if you're watching this, if you have a higher businesses, there's ways you can get that down. So you're not even paying the amount. Now, if you're making a lot of money, 20%, it is a lot of money. So it still hurts. It still feels not fun, but it's something to keep in perspective zooming out, because a lot of countries, especially in Europe or Scandinavia, they're paying 50% in taxes. So it could be there. Like when I lived in Iceland, I had many friends who were paying, 50% and out of my paycheck, but I wasn't, a citizen there or a resident there, I still had to pay almost around 35, 40%. And I wasn't making, hundreds of thousands of dollars like some of my other friends were. So it does suck. It's never fun to pay and see your paycheck and you see how much you made and you see the amount of tax you pay. Like, we're all for trying to minimize that and get that down. But at least now you know the system, you know how it works. The next step is, can you find ways and strategies or recommend working with someone who knows how to play the game, knows how to take advantage of the system within the rules to help you, minimize your amount that you have to pay. So you're not, giving away more than you need to, because a lot of people are paying more than they should, or they're spending all their time, trying to figure out the tax system, and then it's just taking away from their job or their business or whatever they're trying to do. And it's rather like, hey, you should outsource this to someone you trust, someone who's knowledgeable, competent, does this every day, does this for fun, and then you focus on your business doing what you do. And that's the winning combination we have seen. So if you like this video, got value out of it, let us know in the comments. If you want to learn more or work with us, please reach out. We're happy to help, have a phone call. But yeah, and that's for that. And we'll see you in the next video.